Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, the 22nd day of May 2014, and this is the daily report for gold and silver. Although we're still trading within that narrowly defined range, we do have the precious metals across the board higher today. Gold currently trading up about $2, $12.9350 current print. The high today, $13.05, and that is important in my eyes. The low, $12.9080, currently $12.93, $12.94. Silver also higher on the day, currently trading up about a dime. The high on the day is $19.91. Interestingly enough, you can see this rather dramatic spike hike, and the low $19.32. More on silver towards the end of the show. You know, traders, even with this slightly higher pricing today, we did have a couple of items that have hit the news that seem to be slightly to moderately supportive of silver. The first thing is, of course, we had the Fed minutes released yesterday on Wednesday. And after dissecting statements that were made, it appears as though they are on track to begin their tapering process as they have been, but that we're not going to see a real rise in interest rates. That was considered to be supportive to the market. And the second thing that I think could really influence the price of gold is the fact that India right now has really changed their restrictions, their tariffs that they imposed. They're now allowing traders to bring in gold with the upcoming wedding season, and the fact that India is now the number 2 largest purchaser of physical silver physical gold in the world. We'll see if that bears any fruit in terms of a raising of demand. When we look at this on a technical basis, I mean, we're sitting literally in a sideways market. We're trading within this tight trading band. And in terms of the trading band, we can easily see support in at around 75 to 83. These are the low numbers, 83 being this bottom line here based on a 50% fib retracement. Now, I do have 2 fib retracements in here right now. This longer one goes from about 1275, 1274 up to 1391. The market comes down, moves up, and then retraces a little bit. So we've got one here at 1236 up. And so there are obviously no harmonics that we're seeing, and this is why I'll put up 2 different time cycles. There are no real harmonics in here, so we're not gaining a lot of information from that. What I do see, as we talked about over these last couple of days, is if you look at these recent lows that we've had in the market, we have had a series of higher lows pretty much across, very, very slightly higher, but higher nonetheless. When we look at our highs here, and here, even here, we've had a series of lower highs. So we've got a range that is still compressing, still consolidating. Whether or not that is going to unfold as some sort of a breakout or just fizzle and continue to move sideways is something we'll have to see as it unfolds. But in terms of what we are seeing without a question of a doubt a range that continues to consolidate and continues to move closer to any kind of an apex of that move. That would occur roughly at around June. And as we've talked about, many analysts are looking for a big spike or change in volume, change in activity, change in range come June. We're getting close to that. We have Memorial Day weekend in the United States coming up. And so we'll have to see really what happens after that. So when we look for any kind of indication of direction that we might see the market move in, if in fact we do get some sort of breakout, I've gone ahead, converted our daily to a Japanese average chart. When we look at the average chart, we can absolutely see there's no clear definition of trend. Body size extremely small, alternating candle color. Really the criteria for a market that is moving in a defined range-bound manner. First. Secondly, I've got a very, very short-term moving average. This is on a daily chart. It's only a 14-day, and we're just below that. You can see that as this yellow line here. So we're not really getting any information there. The only thing we can say about the weekly chart when we look at that is, we talked about this a little bit yesterday, But there are a couple of areas where we have what we call Fibonacci harmonics. And this is the weekly chart where I've put a multitude of different fib sequences in there, meaning different time cycles starting from here, and price cycles and time cycles. So it is the starting point that changes on this. These are the starting points right here and here, and then they all move up to this record top. And so we get a harmonics there. The only other really strong place for a harmonics is really right here. You get a triple harmonics, and that is just below those most recent lows that we hit on the way down. So in terms of significant numbers on a fib basis, on a Fibonacci retracement basis, of course, we have this area right here, which is really not being referenced in the market right now. There's no need for it. And then we have this area here, 92 and 95, a 50 and a 61. And I think that that's significant. And that's why I believe that in terms of support areas, my sense is that this is a pretty critical area right here of support that needs to be held. We have seen that hold as of now. So traders, when we look at this short-term chart, this of course is a 240-minute chart. We have put up our upper level resistance line here. We have had our lower level support line. This is the new one. This was our prior one that we added in. We are still trading right within the boundaries of this particular market in terms of its range when you consider this is that high today, just over 1,300. But lo and behold, it effectively really ends right at the top of this resistance line. So it moved up to resistance and then began to trade lower and is now trading mid-range of this particular chart. So traders, just as we had the spike hike intraday over 1,300, 1,305 in gold, we did get that in silver at pretty much the same time. On this daily chart, you can see this candle is almost a shooting star candle. Actually, it is, but it doesn't meet the criteria because of where it's falling. A shooting star typically, in terms of its placement, has to occur after the market has had a defined rally. Now, if the market had a defined downtrend, we could look at this as an inverted hammer, but the fact that it's coming a day after a small move right in here would negate that also. We're still going to stay on the sidelines with silver. We're going to maintain our long position in gold. We're going to see if this market wants to break out to the upside and start to trade out of that range. My sense is that at some point it's going to do that. At this point, I believe it will probably happen closer to the beginning of June than the end of this month. However, we still have a week left in this month, and anything can happen. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up. Bye-bye.